Star SCI Managed Fund had a relatively average year, performed in line with the peer group in 2020, although it's still well ahead of the peer group over 3 years. The first half of the year was actually very strong. The fund did well. But the back end, we struggled as the V-shaped recovery took place and a lot of value stocks rallied hard, whereas our quality portfolio definitely lagged in that type of environment. From an asset allocation perspective, we managed the fund very well through the year. As COVID took place and the market sold off, we picked up equities, some very good businesses at cheap valuations, made 141% on Amplats, doubled our money on Capitec, and various other similar situations arose during that time that allowed us to take advantage. But overall, from an asset allocation perspective, we were overweight fixed income for the year, which did well, 8.7%, the Albi. We were basically out of property altogether, had almost no exposure to property, which was down 35% for the year. In terms of equities, we were at weight equities, and the Capswix did 0.6% and the Aussie did 7%. So on a risk-adjusted basis, South African equities actually for the full year did not do so well. And we're overweight, or at maximum weight in terms of our offshore exposure, which returned 31% in rand terms, and we had a 9% positive attribution in offshore stock selection. So certainly a very good year from an asset allocation perspective, and we managed the fund well through that whole period. In terms of South African stock selection, effectively consumer goods, resources, basic materials and technology led the market, and that's effectively 6 shares: Anglo's, Billiton, Naspers, Process, Richemont and British American Tobacco, accounting for 50% of the market weighting of the all-share index. Getting those right certainly would result in a great outcome for 2020, and we actually had at weight or overweight exposures to 4 of those 6 stocks, but got Anglo's versus British American Tobacco wrong. Anglo's did almost 25% in the year, and British American Tobacco did minus 2%. We had a big overweight position in BTI and an underweight or close to 0 position in Anglo's, and that certainly hurt our domestic performance. The weighted average return of those 6 shares in the JSE was 26.5% in 2020. Phenomenal returns just from 6 shares. But if you look at the market as a whole, out of 331 listed companies, 34% of them delivered positive returns, balance all negative. And the median return was minus 12% across the entire JSE. So certainly a tough year for stock selection, where sector allocation became absolutely the overriding return driver. And you had to really be in 3 sectors and overweight those 3 sectors. With respect to going forward, how we're positioned in the fund, in our opinion, high quality portfolio, 10% upside on domestic portfolio to intrinsic value. Our fixed income component yields over 6% and has a duration of 3 years, and we're underweight offshore equities at this point after the huge rally we've seen on developed markets. So we think the fund is very well positioned to outperform. We understand that the back end of the year, the last quarter, was tough for us as value trade was on. But in time, owning a quality portfolio with better financial metrics certainly will outperform, and we're very positive about the North Star SCI Managed Fund.